Hi guys, welcome to Monetize. Today's video is about dollar index. Very interestingly, till my weekly preview, I've given my bullish view about the dollar index, and the fundamental factors behind the bullish view was the US Federal Reserve, the chairperson Mr. Powell, and the entire board members of Federal Reserve. They had a very hawkish view. Means to curtail inflation, they wanted to cut down the supply of money in the money market, in the dollar market. So what happens whenever any central bank they cut down the supply of money, the currency appreciates. And it's been ranging sideways since mid of November. So almost 1.5 months there had been a sideways movement. As per the technical levels on the chart, it was supposed to test the rising trend line, which I mentioned in my weekly preview, and rise higher. Failing on taking the support on the rising trend line, it was supposed to go one level down. The next level of support was around 94.5, and it has almost reached there. So, what happened overnight? What brings the change in the sentiment of dollar index? Number one, Mr. Harker, one of the presidents of US Federal Reserve, he commented that he would like to shrink the size of balance sheet in a very gradual manner. He would take it till the end of 2022 or maybe early 2023. So this was taken as a cautious approach by the hawks. The hawkish view was cut down. Number two, Mr. Powell, the chairperson himself, stated that he'll be very cautious while taking the new steps, means while shrinking the balance sheet. So, altogether, both the comments from the Federal Reserve changed the sentiment in the market. Number two, let's check on the charts what are the levels where we can see dollar going ahead. And very interestingly, I've used two Fib tools. One is Fib retracement and second one is Fib extension tool. And the levels are coinciding with each other. The duplication of levels, the lines and the levels where two lines intersect exactly and brings a super strong level of support and resistance. So without wasting much of time, let's hit the charts and see what lies ahead. Let's start recording the technical analysis of DXY, and as usual we will begin with weekly time frame. What I'm going to do right now is I'll take the Fib retracement tool, started from the swing high to the swing low. What I'm trying to do is I'm measuring the retracement after this downside, this down move, how much it has retraced to the upside. Okay, so what I found that 96.10 is 50% retracement of this previous down cycle. At the same time, what I'll do, I'll take the Fib extension and mark it from this extreme low, this swing low, to the intermediate high to check the extension levels on this upside cycle. And very interestingly, what I found that it has created a duplication zone, and this duplication comes at 96.10. The Fib extension line is Fib 100%. The Fib 100% extension line is at 96.10. At the same time, Fib retracement 50% of the previous downside cycle is also at 96.10. So this zone, this line has acted as a very strong resistance, and we have found so because since mid-November, almost for 1.5 months, the market was ranging at the same level, could not successfully break through. Number two, at the same time, with the same Fib tools, we find that this area is also a duplication area, which is 94.5, and it's acting as support. What I'll do, instead of red, I'll mark it blue. I'm removing the fib lines to make it very clear. Now I'll take the trend line tool and draw my uptrend line. So in my weekly preview last week, I mentioned if it breaks below this rising trend line, then we can look towards 94.5 as the next area of support, and it has almost reached at 94.5. We also have an alternative trend line which will start from this midpoint and connect these highs, and it has also broken the alternative rising trend line. Let's see what lies on the daily chart. On the daily, it has reached almost the support area. This was a very strong resistance. If we see around 13th of October 21, the price got rejected from this area. Then finally it broke through, and now it's coming back to the same area for a retest. So let's see if it holds as support or if it fails. Most likely it should hold as support, and we can expect some bounce. See, on the lower time frame on 4 hour, it has already started making some attempts to bounce higher, and if it breaks above this smaller time frame line, we can expect it to bounce towards these trend lines, which is 95.15, 94, 95.28, and ultimately now we have a falling trend line as well. So what we can expect, we can expect the price to take support around 94.5, rise towards this trend line, or maybe a little higher towards this trend line. If it breaks above this trend line, then it will resume its higher trend like this. Alternatively, if it fails to break, then it may again come back towards this area of support. Moving back to daily. On daily, if it fails to hold 94.5 as support, then it may break below, make a retest, and then push lower. So this is how we analyze the charts as per the given situation. I hope I have given you enough clarity on support and resistance, and this time we have taken support and resistance marked by the duplication of the fib lines. Alright guys, I hope my technical analysis adds some value to your trading.